What's up, y'all? Welcome to the Legacy Podcast. Today we're sitting down with Glenn Von Rosenberg, who is a member of Legacy Family. He's an active real estate investor, owns a flooring business that's extremely successful here in Charleston, and he's going to be talking a little bit about his entrepreneurial journey, how he scaled up his flooring company, and then how that has parlayed into him being a real estate investor and having his hand in a lot of private lending opportunities, joint venture partnerships, and owning and holding his own portfolio. So let's go sit down with Glenn. Glenn, what's up, buddy? Welcome to the Legacy Podcast.
Thanks for having me.
Dude, all right, so we were talking a little bit offline about kind of your backstory, how you grew this seven-figure flooring business, how that has then parlayed into the construction world, how that's parlayed into the investing world, how that's parlayed into ownership of all these different assets. And you got a pretty incredible story, man. So
Thanks.
What I'd love to do is just kind of go back to the start. Let's talk about how you became an entrepreneur. You're kind of thrown into it, had some background in the industry and stuff, but how did you grow that business? How did that create opportunity? How did it open up doors for you? How did you capitalize on those opportunities? And let's just kind of start at the beginning, and then I'm sure I'm going to have a bunch of questions about lessons learned along the way. So bring me back to when you started your flooring business back in 2011?
2011, started Barefoot Floors. It was kind of a difficult time, but you had this desire,
It's a real difficult time, right? People aren't, there's not a bunch of real estate investors out there like there are today. There's not all this big construction industry doing all this stuff.
Yep.
To start a flooring business when everybody's talking about the world ending because of the great financial crisis and real estate, run away from construction. Like, there wasn't a lot of that going on. Like, what was the impetus there?
I think the big impetus was desire to be an entrepreneur. I'd worked at some other companies, some other bigger companies, had some bosses. I always think when you're an entrepreneur or when you want to be your own boss, I think it's important to work for somebody else first, because then you see what you like and what you don't like. What does that boss do that is helpful? What does that boss do that's just a pain? And so I did have a little bit of that background, which I think helps you be a better boss and a better leader. But
it creates that awareness around, how you were treated. I never want anybody to treat me like that. I have a lot of those experiences too.
Right. And I think that was really helpful to grow on. So I fortunately had that background before I did jump into entrepreneurship. And I'd been involved in some other small business. But yeah, with Barefoot Floors, it started in 2011, was coming off of a difficult time for sure. I had $200 and a cell phone. And
literally $200 of cash.
$200. And
nothing more. And then you had a cell phone.
Yep.
And you decided, I'm going to start a flooring company.
And I borrowed my buddy's Jeep so I could drive around. Because I couldn't get credit.
What was the business?
Right?
Like what can you buy with $200? Like, what did the business model look like for you to then start generating a profit?
There's just a lot of hustle. It was wake up early, make appointments, stay up late, writing estimates, follows up, making sure the deal goes through, getting the approval.
So you didn't have your own flooring. You essentially became a sales, like your company was more of a sales rep.
Right.
For the end buyer and the flooring company. So you would go out, do a quote, and then you'd essentially go and find it at a cheaper price point and have somebody else do the install? Is that kind of what it looked like?
I've been in Charleston for a long time. Excuse me. I've been in Charleston for a long time. So I had a lot of contacts. And I think that was very good. But I knew I wanted to have my own business, so my business happened to be flooring. I think the drive is so much of it, and then what you do is a smaller part. I just happen to land on flooring. But yeah, so I just use those contacts and that leverage of, hey, I'm gonna get a deposit, pay you back kind of thing, and grew that. And luckily, it grew. Fortunately for the first year, so
were you like the general contractor doing the install and overseeing the install?
Correct.
Also?
Correct.
Okay. Correct. So it was all things flooring install. So then you go and get the flooring from some lumber provider, then your crews would then go and install it.
Correct.
Got it.
And then you just build out one job, and that one job into two jobs into four jobs.
But that's not what your current business looks like today, right? Well, you guys still do install.
Yeah, we still do installs, but it's only floors, hardwood.
It's only floors, and you have the actual flooring retail space as well, right?
Correct. We have a showroom on Coleman Boulevard. which helps with selections, interior designers, builders, homeowners, what color, what style, what width, all the questions you may have. But having that location is key, and it's essentially located in Mount Pleasant, kind of like where we are now. It's convenient for many people to get to, or convenient for me to get to places.
At what point along the journey were you like, oh well, I mean, being a service-based business, there's usually higher margin, right? At what point along the journey you're like, hey, I want to take on the responsibility of having an actual brick and mortar location also?
It presented itself about 5 or 6 years ago, because we were growing, and that was the one.
So you were about 8 years, 7, 8, 9 years into the business by that time, right?
Yeah, I'd say yes.
Okay.
Yeah, I had a place downtown as well beforehand, but it was more of a construction site and not a full retail kind of showroom place. Moved that to Mount Pleasant, and it's been a nice fit.
Yeah, it makes. What does it do for you? Like, because that's a lot more overhead, right? I was thinking about a couple other. I got a buddy of mine who does personal training, and he wants to go and buy a gym, and I was like, you got a really profitable personal training business right now. That's literally you're either going to somebody else's house or they're coming to your home gym kind of a thing to work out. And it's like, why even take on all that responsibility, right? And take on all that liability, take on all that overhead, take on the headache of managing it and all this other stuff. And then, you got a $6,000 a month rent. Now all of a sudden you got to go and generate a bunch more revenue in order to make it make sense and all this other stuff. Not just $6,000 up, but you got to make an extra $20,000, $30,000 a month in order for even that to make sense. So, at what point, or like, did you do the math? Did you do some sort of like a breakdown on how much more revenue you can generate because you had the retail?
I think it was that, and I think it was a piece of the puzzle that I was missing, because when you're trying to go after those higher end people, the bigger builders, they need that team or that partnership with a flooring guy, so they can then send their clients to me to pick out the floors instead of saying, hey, go online and look at this, or go stop by here. That way we have that partnership.
You're not sending somebody to Home Depot or somebody heading to Lowe's. Just higher level of customer service, more vertical integration in the whole process, and allows you to not worry about losing a client to somewhere else that you're sending them. Got it.
Yeah.
So how has that turned into opportunities, right? The reason we're hanging out and sitting here is because we met through some real estate investing groups, and you're part of Legacy Family, and you got a lot of good stuff going on by funding other people's deals, and you're doing some private lending and partnering and different real estate stuff. Tell me a little bit about how that door opened up. At what point did the light bulb go off and be like, all these investors are making a bunch of money. Maybe that's something I should take a look at doing too.
Yes. So I've never been the biggest fan of 401ks. I like tangible assets, and being in the flooring business, I was comfortable around people. I was comfortable around construction. I was comfortable around real estate, but I didn't have that part of my life. So I was like, well, maybe I can go out and buy this, pig of a property. And then I can put the floors in there. I know a painter. I know a roofer. I know this or that. I know a realtor. So instead of investing in 401k, maybe I can invest in real estate, further invest in myself, and then go and pick off properties and kind of fix and flip them. And
so was that the idea? Was fix and flip, or was it to fix and hold?
Fix and flip, because I didn't really know too much about the buy and holds. I was just at college level, and I was still at high school level of real estate. But the fix and flip was very comfortable because I was fine going into a house. I was fine calling a painter. I was fine doing a roof. I was fine sheetrock. I knew those parts that maybe can be intimidating to somebody else, but I had those contacts. I had those trades, and I was like, why not put two and two together?
Well, I think that's one of the things where I see it nonstop, right? And there's always this shiny object. There's always, apartments were a shiny object for a little bit. And then it turned into the crypto was a shiny object. The e-commerce stores were a shiny object. The Forex trading was a shiny object. The buying trades businesses, right? And not saying that any one of those is a bad opportunity, But if you don't have any experience in doing that, then it becomes a distraction to what you're already doing, right? I think, you know, you see it in legacy family, and people are always like, well, maybe this is a path of less resistance. Maybe this is a grass is greener on the other side. And I think if you want, you know, going back to your point, having fast money, having kind of that midterm money, and then the long-term wealth is important, right? I do that because I have a coaching business and the media company and some of that stuff. And then the midterm money is usually acquisition fees on new apartment buildings that I'm buying. And then the actual buy and hold apartments are the long-term wealth. And so I check all those different boxes.
Yes.
But guess what? They all are a degree away from each other, right? Or incorporated in some capacity, where the coaching business drives investors and drives deal flow then buy the apartment buildings and take the acquisition fees, right? And I think people mess up because they get too many degrees away from what their primary business is.
I can see that.
And you guys were smart because you took a look at, here's our primary business. We understand construction. We understand supplies and materials. Let's take it just one degree off of the people that we're supplying all this stuff to. Let's just do it ourselves also. So I think that's a brilliant move. And for anybody who's looking to, you know, expand into new opportunities, I think staying within one degree of what their primary business is. How do you either service your primary business or, you know, expand on your primary business by being able to then open up this other business? That is the key question. As soon as you go, oh, well, let me go and try this thing out in left field that I've never done before, people trip and fall and spend a bunch of money and lose a bunch of time by doing that. So I think it's good that you did it the way that you did it. So you started flipping some houses. What was then next natural progression?
Well, the natural progression was like, so I flipped these houses, and then somebody else lives there or owns them, and I'm like, man, it'd been nice to have kept one or two of those. Because in Charleston, real estate and, you know, appreciation, it's unbelievable.
Yep.
And you start thinking, well, maybe I need to keep one for a rental. You know, let's see what that looks like. But then, like you said, now you're, you know, flooring guy, business owner, fixing and flip, and now all of a sudden you become a landlord. So now you're adding one more.
It's another business.
One more thing in your back pocket. And so there was some trials and tribulations to that. I learned I needed a property manager. Because I've got little ones at home, and just phone calls being pulled away in too many different directions wasn't fair to the family. So I did have a property manager, and that was nice.
Was that somebody that you hired in-house, or was that third-party property?
Third party. But it was a friend.
Got it.
Who we'd had a background relationship with, so I felt comfortable with it. And you know, and then you kind of, you know, fix and flip 2 or 3, and you're like, well, let's keep that one. And you maybe fix and flip 1 or 2 more, and then you keep one. And they're all single families. But I've found that for rentals, 1 and 2 and 3 is a lot of work, and you don't maybe see the benefit. But once you get a little bit bigger portfolio, it gets exciting, it gets fun, it gets, you know, real.
Well, I think, you know, everybody thinks that you get rich off of the cash flow. That's not the case. You make your money and you build your wealth from the principal pay down, and then the rent growth, and then the property appreciation that happens from doing that. And so, you know, acquiring properties earlier on is more key than acquiring the perfect property. And just getting a property and owning it long term and holding it long term, buying good properties in good areas that you then manage properly, put good debt in place, and then you just hold it for long term. Then you pick your head up, man, and you're sitting on $100,000, $300,000 of equity in a single deal, like a single family home. After 10 years, and you're like, man, what if I had 10 of these? I'd be sitting on $3 million. Or what if I had 100 of these? I'd be sitting on $30 million of equity that just kind of picked my head up, and all of it's there. So it's more important to get started earlier than it is to, you know, find the perfect deal and have all your ducks in a row. It's like, just buy a piece of property and get something that makes sense right now, that cash flow is positive, and then learn along the way.
Action is so important, because as we know with kids and families, time flies by. You know, we're now middle to end of, you know, November. We're talking about Thanksgiving. And so another year's going by, but by taking that action, by buying that house, by putting that in place, even though everything's kind of crazy and turmoil around you, you know, there may not be a perfect time to buy a house, but by buying it and taking that action and putting it in your portfolio, then, like you said, 5-10 years down the road, you're like, wow, I'm really glad I got that house 10 years ago.
Past Glenn was a really smart guy.
Right?
Hey, I'm really happy with the decisions that he made.
I got no sleep, but I still made a good decision.
Yeah.
So.
Well, and I think like that's the key. You're gonna see a series after the new year with my daughter Penelope. She's 9 years old, and her birthday's in April. We're gonna get her a rental property before her 10th birthday.
Great.
And we're gonna go through the whole process. It's gonna be like a little series I think that we're gonna do on finding the deal and underwriting the deal and doing due diligence and then raising the private money on it and then what does it take in order to renovate it and then rent it out and then own it long term and go through that whole life cycle of, hey, if a fourth grader can do it, anybody can do it, right? And so we're gonna go through that process. But what I'm really excited about is she's 9 years old. What does this house look like
I know where you're going.
when she's 20 years old?
Right.
Or when she'll own it free and clear by the time she's 30 years old and have, I don't know if it's gonna be a single family or a quadplex or a small apartment building or whatever, but let's say it's a 500 grand. It'll probably double in value and she'll own it free and clear. She'll have $1 million net worth in her by the time she's 30 years old from a single deal, all because she started early.
Correct.
Because she got going earlier on. And that's the key, right? Yes. The key is just start accumulating rentals early on and then let the wealth increase because of the principal pay down and the property appreciation. So when you start taking, and I think that's one of those things that, people judge that deal based on cash flow. But when you really start looking at what a 3 to 4% rent increase per year can look like, along with making a mortgage payment every single month and seeing how much you chip away at the mortgage, and look at it over the next 5 years, and don't even count the cash flow. If the cash flows are great, if not, who cares? But like, look at what happens just from like a forced savings standpoint of watching this asset appreciate, getting the depreciation that offsets all the gains and the principal pay down, and all of a sudden you pick your head up and in 5 years, you're like, oh my gosh, I'm like way ahead on this thing.
And especially in the area of Charleston where appreciation is growing.
Yep.
So many new people are moving here. It's great climate, great community, great food, great history, great beaches.
Yep.
So I don't see that going away. So you add that on top of real estate or limited real estate or opportunities. I think any deal. I'm very bullish in real estate in Charleston.
Yep. So how are you finding deals now? Because now they don't cash flow, right?
Yes.
Now the deals, it's harder to find deals that meet the 1% rule. Hey, I'm going to buy it for $100,000. It's going to rent for $1,000 a month. Are you finding cash flowing deals in Charleston right now, or are you banking on appreciation? And do you think that's a good bet? Do you think that's gambling?
So there are two things I'm kind of maybe pivoting right now. One is maybe getting out of the C-class areas and going to the A's and B's, and then maybe looking at maybe some apartments and stuff like for you guys. The other thing is Ashley Price, who's also in Legacy, looking at mobile home parks. There's still a few of them around, and those seem to be good deals in which they cash flow, in which we'll probably own the land and the mobile homes, so we'll get double rent from the land and the mobile homes.
I love it. I think mobile homes is a great thing to pay attention to, right? It's affordable housing.
Sure.
It's lower expense. It depends on if you own the land or if you own the mobile homes also, or all that stuff. There's a lot of nuances. Sure. You got to learn the details of it, but it isn't one of those affordable housing asset classes where, when people can't afford a single family home and they don't want to rent a single family home, and their other option is either an apartment or a townhome. I think a mobile home or a townhome is a good option for them to then still feel like they have a home without having people live above or below or whatever. And I think that asset class is going to grow dramatically, and the value of that asset class is going to grow dramatically over the next few years. So I think it's a good space. How are you finding those? How are you finding mobile homes? You partnering up with people who are then finding them?
And I think the other thing I've learned mostly over the past probably 2 or 3 years, it's being around the right people. Lots of people say they want to invest in real estate. Lots of people say they're a real estate investor. Lots of people go to the REIs, which is great education. But how many of those people do the business? How many people actually are in the deals? Mm-hmm. And I get it. I struggle with that probably for a little bit. But I think nowadays it's being in the right room and networking and knowing who those people are who do the deals, who you can partner up with. Like, oh, that guy actually does real estate. Actually, he does what he says he's going to do. You know, let me go to lunch with him. Let me do some coffee. Let me, sit down and chat with him and see how we mesh together. And so that's the best way, is being in the right room, investing in your time, investing in networking, maybe stepping out of your comfort zone a little bit.
Yep. I mean, you've done that, right? Like, I think it's important to go, it's kind of like the whole quality versus quantity question,
That's it.
I think sometimes you need the shotgun approach, and you go out to the REI meetups, and you go out to the RIAs, and you have a lot of quantity of people there, but usually there's only a handful of people really doing deals. I tell you what, the REI Central here in Charleston is probably one of the most active and the highest quality and quantity groups that I've ever seen in any RIA group anywhere I've been to or spoken at anywhere in the country.
I don't miss that one.
Yeah. It's a very, very good group here. But when you go out to those groups, I think the call to action when I go out to a RIA group is I'm looking for the handful of players, right? I'm looking for the quality out of the quantity. And then you can go and spend some one-on-one time with those individuals, right? And go and grab coffee with them, meet with them, talk through deals with them, or figure out what organizations they're part of.
That's true.
That you can then plug into that are just a little bit higher quality. And I think that's a key thing to do, is you need both quality and quantity in order to then, find the higher quality. You need the quantity as well. And that's just part of business, So you went out to the REI Central meetups here, met Kelly, Garrett, and Dusty and those guys, and started plugging into their coaching, right?
100%.
And so they have the local coaching group, and then I think I came in and spoke at one of those,
I think you did,
and you were there, But how has being in those rooms changed your progression, and how has that changed your that expedited your success?
I think that's fair, because let's be honest, being an entrepreneur can sometimes be a lonely quest.
Yep.
And,
very much so.
You kind of get down in the trenches, or you have a deal that falls through, or you have something that's pissed off at you, and you don't have a group of people to, brainstorm off of it. So these REI groups in Charleston, Legacy Wealth, it's a re-energizer, a re-motivator for me, because it reminds me I'm doing the right thing. It reminds me, hey, this is tough. This is not easy. Not everybody can do it. Not everybody wants to do it. Some people kind of like their nice, happy little box, which is fine. But being a part of these groups and these, people, and it really motivates you, I think, and it brings you back, and it gets you ready for the next deal. It lets you know that, through trials and tribulations, that's what makes it worth it. So.
Yeah, I mean, you feel like you're alone on an island as an entrepreneur.
Yeah, it's difficult.
And who do I talk to, and who do I bounce these ideas off of? Nobody else is going to get it.
Yeah.
And then you sit down in a room of a bunch of people from different industries, different walks of life, different parts of the country, and you're like, oh my gosh, like I realized when I sat in those rooms, it's like the problems are all the same. There's just little tweaks, little nuances, and different varying levels of those same problems, right? It's marketing, it's sales, it's accounting, it's finance, it's human resources and team building, or operations. And everything falls into one of those categories. There's tweaks based on the product or the service, and there's tweaks based on the revenue, right, that the business is doing. But otherwise, it all kind of funnels into those things. And I think by learning those different pillars of business and really getting good at each of those, you can then move into any industry. You can move into any asset class and be of value, because you understand the underlying business components of business, as opposed to just that widget that you're trying to sell or that service that you're trying to sell. Yeah. So all right, so you've built your own portfolio. You started partnering with people who are very active in mobile homes and those kinds of things. Where do you see the market going over the course of the next 24 to 60 months? So 2 to 5 years. What does it look like? Where are the opportunities? You're pretty local here in Charleston, so you can talk locally if you want to leave it at that.
The biggest thing I've seen previous to 6 months to now is, the election's over. We know who the president's going to be, so we have all that drama behind us. Also in the construction and flooring world and even real estate, it's starting to trickle. I'm seeing the most momentum I've seen in years.
Really? So out of the woodwork, contractors coming back out, and just people are doing new projects.
People are
permits.
signing up. People are putting pen to paper. A lot of positive momentum, a lot of positive energy, a lot of forward momentum.
Isn't that insane? I was talking to Q. I was meeting with Q for coffee before this, and we were talking about the election, right? And we were talking about, like, if you didn't have a television and you didn't watch the election, and like you just went along with your life, nothing would have changed over the past 30 days for you personally.
Correct.
And all because of the news saying, oh, somebody new is going to come into the office of president of the United States and blah, 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 blah. Perception has changed. And that perception has created this reality of people spending more money, investing more money, doing more deals. Like, isn't that insane that how much perception drives reality and creates reality? So if you can change your perception, you can change your reality. Or if you can help somebody else change their perception of something, you can change your reality and their reality, and hopefully for the better. But it's amazing how just like nothing's even happened, but it just completely changed because of the psychology.
I know I'm going to have the foot on the gas to the floor for the next 4 years. Hopefully, knock on wood. I just think the opportunity and what's ahead, because we kind of had the COVID craziness, the post-COVID money, which helped real estate and construction. And then now we have continuation of people moving to Charleston. Now, whatever lap we're on, fourth, or, now we have a new president, and that energy that's going to drive for 4 years. So Charleston's been on a big wave for many years, probably 4, 5, 6 years, and I think it's going to keep. I think it's going to keep going. This past month has been unbelievable.
Well, it's different than a lot of other towns because it's surrounded by this green belt, right? It's got a national park to the north. It's got all these conservation easements to the west and to the south, and then obviously you have the Atlantic Ocean on the east. So it literally is a bubble, right? When other towns can just keep on going out and have, urban sprawl and suburban sprawl into a lot of the farmlands and that kind of thing. Charleston can't do that. If you want to work in Charleston, you have to live in Charleston because otherwise you have to drive an hour and a half each way in order to get through these green belts and do business that way. So it creates an actual bubble. There's a lot of money that's gone down to Florida. Florida's gotten the prices have gone bananas there. The insurance is through the roof there.
It's tough.
People are tired of the storms, and they're kind of like coming back to the Carolinas, and Charleston obviously is the big coastal town that everybody wants to be at because of all those things that you had mentioned, the food and the history and the beaches and the boating and the architecture and the art scene and all the other stuff. And so it is this bubble, and I do see a lot of the Northeast, a lot of the Mid-Atlantic, a lot of the Midwest coming down to Charleston, and this area continuing to grow. And when you can't go out, right, the only thing that you could do is go vertical, or prices just start going, just keep on going up. So I do think that that's going to be a continued thing here in Charleston. And from a market standpoint across the country, it's just there's a dramatic need for affordable housing. There's a dramatic need for housing altogether, and especially affordable housing. So just the value is going to keep on pushing up. The more demand there is, and the lower amount the supply is, the only thing to do is values are going to keep on pushing. Rent's going to keep on pushing. And I think where the real opportunity is in figuring out this affordable housing by either having tracts of land. I think land's going to start crushing. It's going to start doing really, really well. If you can figure out how to build affordable housing on that land, or taking existing housing stock, mobile home parks, residential, and then just updating it and making it cleaner, safer, nicer, more functional than what it was before, and then just taking an older housing stock, cleaning it all up, and then making it available, because you can't build for what you could buy and renovate for.
And being in the game, finding those houses and just run the numbers, talk to a mentor, talk to a coach, and I think just get in the game. And then once you get one, then you get two, and you get three, and like you said, 5 or 10 years, we don't know what Charleston's going to be like, but it's not going to slow down.
Yeah. I think what'll be interesting is, obviously affordable housing is going to keep on going up in value, but like the baby boomer generation, as they have these big homes and they want to downsize because they're empty nesters now, or they want to downsize because they don't want the headaches. Like my parents have a big house up in Ohio and they don't want to manage it. It's 2 people living in a 6,000 square foot house, right? That raised me and my brothers and my sister and a couple dogs and all this craziness. And then we all moved out and they still have this big house. Like, what happens when they want to downsize? What happens when they want to, or I don't know, they go into a nursing home or an assisted living facility, or they want to move into like a retirement community where it's 55 and older or something. And there's all these big houses on the market that then come back onto the market. I wonder what that's going to look like. I think a lot of those are going to end up flooding the market over the next 5 to 10 years. And, they might be worth $2 million. And because so many of them come on the market, are now worth, $750,000 and almost becomes, refeeds the housing stock. So it'll be interesting to see how all that shakes out. But I think residential real estate is going to absolutely crush over the next 5 years.
Yes.
Between now and the end of this decade, I think you're in a really good spot. And the sooner you can start accumulating property, multifamily under $100,000 a door, single family under $250 a door. Yep. I think it's all going to be going up to multifamily $150,000, $200,000 a door, and the single family stuff's going to all go up to $300,000, $350,000 a door. It's just it's how all the economic indicators are pointing, because nobody else is building or bringing affordable housing to the marketplace.
In Charleston, we have the colleges, we have the businesses, we have the history. I just think it's an attractive place.
Yeah, and a lot of people are moving here. It's still got the good weather and all those things, and it's still drivable back to the Midwest within a day. It's still drivable to the Northeast and the Mid-Atlantic within a day. And whereas you go down to Florida, or if somebody moves to Texas, or they move to Arizona, and they're from the Northeast, or they're from the Midwest, or they're from Mid-Atlantic, they got to either take a couple days to drive, they got to fly, or just becomes a little bit more. So I do agree. I think that the Carolina is going to be a really good market over the next few years. Still business friendly, and a lot of good stuff going on. I'll tell you what though, I invest here just mostly because my team's here, not necessarily because I think it's the best market to invest in. I think there's a ton of money to be made in Arizona and Nevada and Texas, and I think Alabama, Mississippi, and Louisiana. I think those are all really, really good. Obviously, you get hit with some hurricanes and stuff like that there. But Tennessee, a great market. They're all great markets. I think it's really important for people to invest in their own backyard as well.
I agree with that. You want to be able to check on the property. You want to be able to go see. After we've had some storms and stuff, you got to get in the truck and drive around and see if the roofs are still on, see if a tree fell down.
I mean, I'm buying a deal up in Cleveland, Ohio, right? Why? Because my team is in Cleveland, Ohio. Yeah. I don't really buy in Cincinnati because my team's not in Cincinnati. I don't really buy in Toledo or Columbus. Columbus is probably one of the best markets in the entire country, and I don't buy there just because I don't have a team there. My team is in Cleveland. My team is in the Carolinas, and so that's just where I dive deeper. And that's a lot what you guys do too, right? You're right here. You know all the contractors. You know the management companies. You have your private investors are all locally. Your operating partners are all local, and these are the markets that they do business in. So it's easier. You got the resources, and I think there's something to be said about having the safety net there of having those resources as opposed to like going wide. I went to 12 different states, and I can tell you, like, you got to learn 12 new sets of laws. You got to find 12 new title companies or closing attorneys. You got to find 12 new management companies. You have to find 12 new, understanding of the local vendors and the suppliers and all this other different stuff. So, I think finding a couple markets and then going deep into those markets is a much better move than trying to go wide across multiple markets.
I agree 100%.
Yeah, that's great, man. Well, I think it's really cool to see somebody who's kind of on the forefront, right? Like real estate's a little bit of a lagging indicator. You're on the forefront because you're able to see people coming in and placing orders. You're able to see people coming in and pulling permits and taking on jobs and buying projects and all this other stuff, where you see it a little bit sooner than the housing stock and the deliverable product comes to market. You see it 6 months before, and you're seeing a ton of excitement. So I think that's really cool to see how that's going to play out over the market in the next 6 to 12 months, and then how that momentum continues to ride over the course of the next 3 to 5 years.
Yeah, I think there's just a lot of momentum here in Charleston, a lot of positive stuff going on. Lots of the drama that's affected us over the past month or two has now been resolved. We know who's president, we know which direction we're going. I think there are a lot of people waiting on that, and to each their own. But I think it's just really interesting to see the positivity, the future of what's coming up.
Yeah, there's a lot of confidence in the pro-business aspect of what Trump could bring.
Yes.
I think things are going to get mixed up a little bit, shaken up a little bit while he's coming in and moving the departments around and all this kind of stuff. So I think there's a little bit of uneasiness. Like the 5-year and 10-year Treasury are still up. Those rates have not come down, even though there's been 2 rate cuts in a row. Yeah. There's another meeting of the Fed right before Christmas. And so will they drop rates again? Across the board of a lot of the people that I talk to, they don't expect a lot of rate drops again over the course of the next 12 months. Maybe another 50 basis points, at most 100 basis points, but a lot of them are like, they expect rates to be pretty steady. The private equity funds, the debt funds, the institutional lenders, the brokerages that I talk to, both mortgage brokerages and sales brokerages, and then just other people who are very active operators that I've spoken to, is everybody thinks rates are going to stay pretty steady. So I think the play there is, if you have a stable asset and you can refinance it and get into lower debt right now, go ahead and do that. Don't try to time the market. No. I think if you just get into fixed rate debt right now, it's a better position to be in, so that way you can then continue to capitalize. Just get out of the bridge debt, get out of the variable rate stuff, lock something in that's maybe got a 3 to 5 year prepayment or balloon on it if you're in the commercial world, and then just put yourself in a position to then refinance in 3 to 5 years from now, right? You're only dating the rate anyways. You're really marrying the property and putting yourself in a position where you have consistent and predictable expenses. I think is the best thing, at least that we can do right now.
I agree. Long-term debt, good location.
Yep. That's the play, man. Well, it's good stuff, man. Great to sit down with you. Great to hear a little bit about your story. I love starting with $200 and just bringing some grind and bringing some hustle with it.
I wouldn't want to do it again.
Yeah, it's not fun, right? But it's a great story, and I think you got to be sharing that story more often, right? It's one of those stories that a lot of people have lived, or they might be living right now, that gives them some inspiration and a lot of hope of what they can accomplish by just bringing sheer will and diligence to the process, and knowing that you can take it from $200 to doing multiple 7 figures in business and being successful in that regard, and building a portfolio of 7 figures of assets that you're also owning and paying down and is appreciating over time. And then all of a sudden you pick your head up, man, 20 years later, and you had a great career, and you're sitting on millions of dollars, if not tens of millions of dollars of equity in deals and equity in business. And you're like, man, it's not always fun in the process, but being able to just go through the process for a couple of years and several years, being able to then pick your head up and being like, I made good decisions along the way. The key is just buying assets. Yeah. That's the difference between the rich and the poor. Is just whoever buys the assets is the one who ends up winning in the end.
Yeah, I would want to challenge people to step out of your comfort zone, take action, and then be in the right rooms.
I love that. Great takeaways. So appreciate you, brother.
Thanks, man.
Thank you for being here.
Good talking.
Hey, thanks for being here. If you would support our channel, please like this video. Please subscribe to the Legacy Wealth YouTube channel. We're always trying to put out a ton of great, valuable content for entrepreneurs, for real estate investors, and anybody who's trying to improve their personal financial situation, their lifestyle design. So appreciate you being here. We are here every single Sunday on the Legacy Podcast. I will see you next week. Be your best.